retail investors are greedy, and that's good, and that's why we're here. So double-digit returns in agriculture business is something what I call crazy. It will not last for forever, and now is the moment to earn these 12% interest rate which we generate for the investors. But that's not a normal market conditions. That's a little bit too high. So someone has to pay these 12% interests which the investors are receiving. So farmers would expect to receive an interest of 8, 9, 10%. That would be okay for them. And double digits are a little bit too high. At the same time, we are having products which might be interesting to your community as well. We just signed the contract with the government in Lithuania that interest rates will be compensated. 50% of the interest rate will be compensated by the government. So if the investor receives 12%, farmer will actually pay 6%.
Welcome back to another P2P Talk. Today I'll be talking to the founder and CEO of Heavy Finance, Laimonas Noreika, and in today's discussion you will find out whether it's a good fit for you to invest in secured agricultural loans. So welcome to the interview, Laimonas.
Hi, Egg.
So let's start with a brief introduction of Heavy Finance. I know it's a very new platform, a relatively new platform, so can you introduce your project?
Yeah, so it's a relatively new platform, as you say, but it's founded by experienced founders who are already quite well known in a peer-to-peer market, crowdfunding market, as we call it. So we are in the agriculture business, and it's a niche we love because it's a niche and it's a big niche. And when you think about agriculture, it's a niche where it's always kind of important to our daily lives, and food is what we use each day, so it always generates revenue to the farmers and food for people and interest to the ones who invest in agriculture. So that's why we created the Heavy Finance, and that's why we really focus on this superb and super big niche.
Mm-hmm, mm-hmm. So basically what you guys offer is to investors to invest in loans which are backed by heavy machinery, correct?
Yeah, exactly. So what we do is we ask or invite investors to invest in a debt instrument. So basically farmers take a loan from our investors community and pledge their asset as a collateral to reduce the risk for investors not to receive money back. But at the same time, what's important to understand that first of all, we issue the loan to the farmer itself, not to the asset. So there's always a farm behind the loan who is responsible to repay back the loan.
Mm-hmm. Can you tell us a little bit more about the typical borrower that borrows money through Heavy Finance?
So typically, when we started, we really focused on the small and medium farmers. The thing is that in Europe, the existing agricultural market is really big. It's 330 billion, the existing market. But according to the statistics, there is 30 billion euros missing as a financial gap for the farmers. So what we did, we really focused on the small and medium farmers. Being a small farmer, when we say a small farmer, it's a farmer who owns from around 50 to 150 hectares of arable land. So that's a typical farmer. But at the same time, what we learned that our product is really loved by the bigger farmers, and even the guys with 300 hectares, 400 hectares also use our platform. So when you invest with a Heavy Finance, you really can expect a whole range of small farmers and big farmers, where the average loan size is around 60,000 euros and the average term of loan is around 33 months.
Mm-hmm. What is the loan typically used for? Is it used to buy more land? Is it used to buy more machinery?
So basically, from financial perspective, we are giving two products. So one is a working capital, and two is purchasing of the equipment to work. So these are two products we are offering to our farmers.
Mm-hmm. And can you tell us a little bit more how the loans are secured? What's the deal structure behind it, the collateral?
So basically, the loan is finalized between two parties. So investor on one side and the farmer on the other side. Heavy Finance is just a platform who organizes, who administrates it, but is not a party of the loan itself. So that's very important to understand. So when you say from the beginning that we are a young platform, it doesn't actually change the contract behind you and the farmer. So if, in the worst case scenarios, a young platform really goes bust, in such a legal framework we're operating, the contract between investors and the farmers still is 100% valid. So that's very important to understand. So what we do, we connect two sides, and we help them to sign a contract, which is signed in a notary, and then the asset is pledged in a first-hand mortgage registry. So I truly believe that this legal framework is one of the best ones for investors they can find, they possibly find, and yeah, at the end of the day, you have invested in agriculture and have a really nice asset as a pledge.
Mm-hmm, mm-hmm. And who determines the value of the asset?
So just to have in mind, to give you an explanation, the asset itself in our credit scoring is only 10% of the credit score itself. So there are many factors which we evaluate before we really give the rating of A, B, C, or D on our platform. And the heavy equipment which we pledge is only, or LTV ratio, which is so important for investors, is only 10% of the credit score itself. The more important is, how big is the farm, how is the revenue growing or reducing, how is the profit, how is all the asset to loan ratio, and all these things are more important to us when we decide on the rating. But at the same time, answering your question, there are two ways we do the valuation of the heavy equipment. So first of all, there is always an independent valuators who are regulated and licensed, and they go and see the asset by their own eyes at the point where the machine actually stands. So they not even it's not enough to take a picture and see the how much it costs on a website. So they go and they check what's the quality of the asset at the current moment, and they give the value they think that the equipment is worth. So basically we hire independent evaluators to do so.
Mm-hmm, mm-hmm. I'm also wondering how those agricultural secured loans compare to, let's say, real estate backed loans. Because from my point of view, it's quite an interesting collateral, but I would like to know what you think, how your product, let's say, compares to loans that are secured by a first rank mortgage on property or let's say a house.
Yeah, when we speak with people, we don't really want to be compared to real estate because we love real estate as well, and we maybe can highlight the benefits of investing in our asset, right? So when you think about agriculture and heavy equipment, the first thing which you have to have in mind is the diversification. So first of all, it's economy agnostic. Farmers don't care if Lehman Brothers goes bust. Farmers don't care if there's a COVID or something. You still need food, and they care more about sun and rain and what Mother Nature brings them. So that's important. So it's economy agnostic. That's one which is very important when you're building your investment portfolio. The second thing which is very important. So. Heavy equipment is a pledge, is super liquid. So there is always a market to sell the equipment, no matter what happens. If the farmer goes bust or if all farmers goes bust in one small country or other country, so these equipment just easily travels to the other country by reduction of the price of 10%, and it's next day sold. So that's very important. And compared to real estate, it's very different environment in the liquidity and this economy agnostic situation I explained. And third thing is whatever happens, the biggest layer here, and what we sometimes forgot to think about agriculture, is that European Union highly supports agriculture, and it is a prime infrastructure for European citizens. So whatever happens, they will always support, and we always make it happen for farmers. So investing in such a niche is from my perspective, I've never seen a better investment from that kind of ideological perspective, right?
Yeah.
So that's why I really love it myself.
No, I'm asking these questions because I feel like it's an interesting asset in terms of asset allocation within the P2P lending industry, and if people or the mainstream investors, they are very much aware of real estate backed loans. However, if they want to diversify within secured loans, I think agricultural loans could be an alternative for sure. You mentioned the aspect of liquidity. So have you had already a case where the loan defaulted and you needed to liquidate it?
No, unfortunately, no. As for now, our credit scoring doesn't have any negative data points which we could use to adjust our credit scoring. So even if we sometimes want to have some defaults to check a recovery mechanism, so far it's we are kind of conservative here. So yeah, no, not yet. For sure, there will be some, and I maybe can give more hint on what we expect here with our credit scoring and what we try to achieve. So we say that at least 20% of all the portfolio of all the farmers will be late at least one day. So that should be a normal thinking. So 20% being late is okay. But then we expect that around 5% of the farmers will actually default. And we expect that at least half of the defaulted amounts will be recovered in 2 years period. So that's the expectation, which should be in mind with all the investors who onboard with Heavy Finance. But as for now, it seems we are doing quite well, and let's see what happens.
Yeah. I'm aware that Heavy Finance also recently published an audited financial report, which is quite rare to see for newly launched platforms. So can you comment about the performance of Heavy Finance for last year?
Actually, the founders are kind of extremely happy with the results we were having. We didn't expect such nice growth, and our investors community are appreciating that we are able to provide quite a lot of deals. And just February this year, we financed €1 million worth of loans. So for a new platform, it's relatively big numbers, knowing that we originate the loans ourselves. So we are happy with our financials. Founders are ready to support the company, and we focus on a high growth. So transparency is a big issue for us. So we will keep on updating our shareholders, our stakeholders, our investors community with small things like audited financial results. So I see crowdfunding platforms in a way that it's kind of the companies who already did IPOs, because they have big communities to adhere to, talk to. So we need to act like one. We need to, from the day one, we need to act like being a regulated company, speak as a regulated company, and show an example. So that's what we're trying to do here.
So if I understand correctly, profitability is not a high priority right now. You focus more on growth. Is that correct?
Absolutely. Profitability would be a stupid thing to reach after 8 months of operations, right?
Definitely.
So we will try with our best not to reach the profit at least 3 years from now.
I've noticed you expanded in Bulgaria and Portugal this year, which I find quite impressive for assets like a relatively newly launched platform. Expansions usually take a longer time, so good job. And also your loan originations last month were quite impressive, in my opinion. Um, but with more loans, with more projects, there comes also the question of quality. Um, how do you make sure that the more loans you onboard, the quality of your due diligence of the credit scoring remains still high for the investors?
What we're doing here, we're standardizing the process. So it's even if it looks like a new platform, but there's experienced founders behind it, and I, for example, don't participate in deciding which loan goes to platform and which is not. It is a standardized product, which you either fit in it or you don't fit in it. So investors should expect exactly the same standard, no matter where it comes from. Portugal, Bulgaria, Lithuania, Germany. It's you either fit in the standard or you don't fit in the standard. So and we automating these processes as much as possible compared to the young age of the company, but that's the way it is. And it would be stupid to reduce the standard of your loan quality, because you will lose your customers. So fintech companies is a long-term game, and you have to focus on how you will compete after 5 years, after 7 years. So that's very important, and we see that some platforms who did that really lost their community and their interest. So that's not our way.
Yeah, that's exactly the reason why I asked this question. What I would also like to know is whether or how long it takes for the borrower to from the process of application to get the amount on their account, and how many of your applications you decline.
So unfortunately, we are affected at the COVID-19 situation in some strange way. So notaries are really busy with the deals, and the way they organize their job is that they now serve less clients. So it's hard for us to get a deal with the notary done and the next day when you want it. So it sometimes takes 2-3 weeks to sign a deal with the farmer in a notary. So this is the thing which we don't like, but we try to solve it. But at the same time, with answering your question, so it takes around from 2 to 4 weeks from the farmer, when he engages us to finance the loan or to pay the loan to the farmer. So that's a normal thing, from 2 to 4 weeks. But we do have situations when we make it happen in 1 week or a little bit more than a month. So that's how it is. Answering your second part of the question, we call it a conversion rate from the lead to the finance farmer. So currently it's around 10%. It's both. So some farmers don't like our price because we are relatively expensive for them. Some of them is declined by us. Some of them chooses other lenders. So it's 10%.
Mm-hmm. I was asking because obviously I think the investor starts earning interest after the deal has been finalized, right? Not as soon as the investor clicks invest into a specific project. The investors need to wait until the deal is finalized, right, before they start earning interest. Is that correct?
Yes, that's correct. What we're thinking about now is we want to create a rule where a farmer has a time of, let's say, a month to make the deal happen, to come to the notary, and we think that it would be wise to introduce some interest on the moment then it's agreed that you must pay the interest even if you don't use the money yet. So that's the mechanism we're thinking about. We didn't have yet implemented it, but I do understand where your question comes from, and we're thinking about it.
You also mentioned that you might be expensive for some of the farmers. Can you tell us a bit more about the APR, about the cost for the farmers?
Yeah, retail investors are greedy, and that's good, and that's why we're here. So double-digit returns in agriculture businesses is something what I call crazy. It will not last for forever, and now is the moment to earn these 12% interest rate which we generate for the investors. But that's not a normal market conditions. That's a little bit too high. So someone has to pay these 12% interests which the investors are receiving. So farmers would expect to receive an interest of 8, 9, 10%. That would be okay for them. And double digits are a little bit too high. At the same time, we are having products which might be interesting to your community as well. We just signed the contract with the government in Lithuania that interest rates will be compensated. 50% of the interest rate will be compensated by the government. So if the investor receives 12%, farmer will actually pay 6%. So that's very interesting mechanism, and it exists in many countries, different forms. As I said, the support of the government, so that reduces the price for the farmers. So we will have more and more farmers on our platform. And just to give you a hint, there is another thing which we signed. We're currently working with. So it seems that many of our loans will be 80% guaranteed by the government, that if the farmer defaults, the government will pay back the principal part, 80%. So as I mentioned before in the start of our discussion, government support is really important, and that's what we're trying to bring to the investors community. These opportunity to invest in a government supported niche.
So the APR, to get back to my question, so the APR for the borrowers is around double digit, meaning 12, 13, 14, 15%.
For the borrowers, yeah, exactly, around 40%, I would say. That's what it is now.
14%, right?
Yes.
Yeah. Okay. I also know that Heavy Finance is regulated by the Bank of Lithuania as a crowdfunding platform, I believe, right? Do you also need to have license in the specific markets where you originate the loans?
No, not really. So also maybe that would be interesting to your community. So last year, European Parliament at end of 2020 agreed on the unified crowdfunding initiative. So each country in the EU will have to adapt it in I believe 1.5 years from the moment it was agreed that we will work on a unified rules of crowdfunding. So we are now acting on pretty much the same legal framework as it will be in all the countries. So even if there are some peculiarities which we have to know, which creates some difficulty, so we are allowed to issue the loans in other countries like Bulgaria, Portugal. We are operating from the crowdfunding license we have in Lithuania. The crowdfunding is more, the licensing and the regulation comes more from the investors' protection perspective. That's why it is created, to create more protection for investors. So it speaks less about project owners or farmers, but more about how your funds are segregated, how what happens if we go bust, how we deal with our procedures and these things. So yeah, we are a regulated platform. We like it, and that gives a much more protection for the investors than in a non-regulated market.
You also mentioned you are growing quite a bit. The loan volumes keep increasing. New projects are coming in every month. And I also know that you guys fund some of your portfolio through EvoEstate. Can you maybe reveal how much of the funding you receive from EvoEstate versus your platform?
I believe Evo is now doing like 10-15%. So not super, not so much, but we love them, and yeah, they have a nice community. Why not to show our example to the other communities which we don't yet have a contact with.
So if for instance I'm an EvoEstate investor, what is the main advantage for me to go invest directly on your platform?
That's a good question. It depends, you know. It's what do you want to achieve. So with us, you get a direct investment without intermediary. So it's a little bit more of the more security. So you don't take the intermediary risk. That's one. Two, you have your own separate account in the, you know, you see everything, all your deals yourself with the full information. But I think that what we created with Evo is a nice commercial deal for both companies. And it's convenient to the investors. So we don't really care how you get into our platform, because at the end of the day, you know heavy finance, you know the asset, you know the risk you're taking. You just choose the more convenient way to do so. What we're doing now as a heavy finance way, we are creating it to be more convenient when EvoEstate. But at the end of the day, you know, you choose yourself the more convenient way.
Yeah, right. Maybe last question. Can you just wrap up the discussion by saying who is the target investor? Who do you believe is the right fit for heavy finance?
The people who thinks where they are investing. So we are giving the securitized loans in a sector which is, you know, I just mentioned so many benefits around it. So people who are willing to protect their funds, so meaning they have more amounts to invest, these are the ones we're speaking about. So if you see the numbers, our investors community are relatively small, but we kind of finance quite a big amounts. So there are guys who are investing significant amounts, and that's exactly our target customers. The ones who are, you know, willing to earn securitized 10%, and they say, "Hey, guys, that's a good deal." So these are the ones we're looking for, and that's the ones we are focusing on.
Do you plan this year to also expand in more countries apart from Portugal and Bulgaria?
So for us, the target markets where we will one day tap into and you know, fight our biggest fight is Spain, Poland, and Romania. These are three countries who lacks financing most, according to statistics in agriculture. Tier 2 countries, what we call is Lithuania, Portugal, Bulgaria, a few others, where we started to create our playbook, how we operate, how we hire people, how we do the first steps, and these are important. So if you would see it in Portugal and Bulgaria, we started slow, but that's exactly what we like to do. We don't want to, you know, rush things. We want to learn things. We don't want to make mistakes. We know our local market, but it will take. And all what happens now, it's strange, but it's absolutely according to the plan which we wrote at the beginning of the company's existence. Just the thing is that we constantly, exceeding our budget. So that's very strange, but it's planned, and we will see the third market, which will be the bigger one, but we're not sure yet which one.
All right, Laimonas, thank you so much for your time. I think the community will appreciate how transparent you are, and I think Heavy Finance was probably one of the best new platforms, let's say, in the P2P lending industry. It's certainly exciting and interesting how you guys operate. I wish you all the best. I hope I can catch up with you in a few months, and you give me some updates on how Heavy Finance is doing.
Sure. Thank you for a chat, and I wish you all the best to your community. and yourself as well. Join Heavy Finance, experience the agriculture, learn about tractors and harvesters and all other crazy things which you don't see in your daily life. And yeah, have a nice day.